So it's time to do business again. This is Business Incorporated, and we'll go around the world of business in 55 minutes. Here's what we have prepared for you today. In Nigeria, PMS import has dropped expectedly since we now have domestic refiners. And Egypt's net foreign assets rise for 11th consecutive month. Ghana's credit program with the IMF is back in the news. They're trying to unlock $370 million. You're welcome to the program. I'm Ini John Mekwa. We start from the global space. Tell you that gold prices hit another all-time high on Wednesday as weaker dollar, escalating trade tensions, and concerns over global economic growth increased demand for the safe haven bullion. So we see gold. Yes, we're celebrating 3,200. Earlier today, we saw 3,300, and now is heading back there, $3,270.12, up more than 1%. U.S. gold also up $3,286.30. Spot silver followed suit, 0.1% in the green, $32.32. Platinum is, however, on the flip side, lost 0.3%. $956.64 a barrel, and palladium remains unchanged at this time, still holding on to $971 per ounce level. The dollar index fell 0.4% against its rivals, making gold more attractive for the holders of other currencies. And further escalation of the trade tensions between the U.S. and China. Nvidia is in the middle of it this time. They said that they are going to take $5.5 billion in charges after the U.S. government announced the limit to exports of H2 artificial intelligence chip to China. Adding to this, China has ordered its airlines not to take any further deliveries of Boeing-bound jets in response to the U.S. slapping 145. So the tension is getting stiffer and stiffer. We don't know where it will end. Traders are currently expecting around 87 basis points of the Fed point reduction by the end of 2025. And now to the oil space. Prices fell about 1% on Wednesday as shifting U.S. tariff policies fueled uncertainty, prompting traders to weigh the potential impact of the U.S.-China trade war on economic growth and energy demand. So we see that for Brent, it's down 1%, $64.01 a barrel. WTI 1.1% in the red at $60.64 a barrel. And we see that global oil demand is expected to grow at its slowest rate in 5 years this year, and U.S. production gains will also taper off because of the president's tariff on trading partners and, of course, retaliatory moves also from their partners. Concerns over Trump's escalating tariffs combined with rising outputs from OPEC+, of course that includes Russia, have already dragged oil prices down roughly 13% this month. The uncertainty surrounding trade tensions had led several banks, including UBS, HSBC, to cut the crude price forecast for 2025. And still staying in the oil space, the Chief Executive Officer of the Nigerian Midstream and Downstream Petroleum Regulatory Authority, Mr. Farouk Ahmed, says that local production of premium motor spirit, that's PMS petrol, is displacing importation of the product into the country, sharing this information with members of the press. He is saying he's also looking at the potentials and the consequences that this could have on the economy. That's what we're going to be discussing with oil and gas experts. Dr. Wisdom Enang joins us virtually now. Dr. Enang, good afternoon and welcome to the program. I guess this should be a pleasant news to Nigerians, the fact that the import of PMS has plunged.
Absolutely. It's a fantastic one. And very much so, if you look at the consumption, I mean, Nigeria consumes between 40 million liters per day to about 60 million liters per day. And we've been able, as a country, to achieve production increase from what it used to be at 3 million liters per day in September 2024 to about 24 million liters per day in April 2025. So that's a good one. And similarly, we also have importation drop from about 45 million liters per day in August 2024 to about 15 million liters per day in April 2025. So that's a good thing. The much of that is being attributed to the local refineries, very good. But the central theme that underpins the ability of local refineries to produce and produce more so in a very effective and efficient way is the crude for naira deal, which I believe we will delve into much earlier. But that's a very good news for consumers and for everybody.
Yeah, well, we might as well go there to the crude for naira and the issue of pricing in the midst of the decline that we see in the global space of crude. How do all of this meet up? Because being a deregulated environment, Nigerians would expect that prices will drop as it declines in the global space. And now there should be less pressure on FX because crude for naira is back.
Absolutely. Right. So when we talk about, the entire PMS market, two cardinal things come out. The PMS supply and the pricing is really important. And both of them have the ability to affect both because they're quite interconnected. So yes, the crude for naira deal was kind of a common denominator between all the refineries and the economic realities of Nigeria. In fact, it brought PMS prices to as low as 860. But what happened when it was temporarily paused? That showed us the effects that the crude for naira deal had on the economy, the crucial effect, because once it was paused, we had fuel go from 862 to about 930, and then the exchange rate went for about 1,545 to about 1,600, which of course underpins the fact that supplying this crude to the national refineries in the local currency is very much cardinal to boosting their production. So what are we going to be expecting based on what we currently have? Yes, increased supply at the naira prices are going to help to engender our production. But when I say increased supply, it means that we need to meet or exceed the quota. Remember, Eni, that we've had a challenge where much of the quota that was given, I think it's about 450,000 barrels per day crude allocation to the local refineries, wasn't actually met by the NMPCL. So getting adequate supply would mean that we would be able to get this quota achieved. Now, when we talk about pricing, the pricing is a function of, yes, the crude in the international market, that's one component, and the naira exchange rate, that is another component. And when you look at our exchange rate, hopefully now the crude for naira deal is back, we should get it appreciating. So the fuel prices should really settle back to about 870, 880 naira that we're having at the retail pumps. But on the overall, what I do expect is that we'll have stable supply, and then as the exchange rate detects, we will be able to have very reasonable, benefits in pricing.
All right, Dr. Now help us to understand the workings of the crude for naira, at least from your perspective. I've seen some people say that it's a form of subsidy. Is there any element of subsidy in the crude for naira policy?
No, it's not a form of subsidy. I would not call it that. Because when you talk about subsidy, people think about consumption. But from a production standpoint, it's just to say, look, we've got some realities, we've got some markets, realities where if you stepped out right now and went to your bank and said, I wanted to get some FX, you might not get it quickly enough, and you might resort to the, black market to get your FX. And what that means is that if you get FX to import your crude, then it would worsen the FX, prices, and then it will also meant that the crude that will end up with is going to be expensive. So the government has said, look, go and you'll be able to take up the crude and then pay in naira. So it's just like a middle ground, not a subsidy, but sort of a support, an incentive, or maybe a sort of a cushion looking at the realities that we have in country today to say, look, let's not allow them to go and destabilize or skew the FX market, primarily because they'll be going to the black market to get it, and that will skew all of the gains that we've made in the FX market. Let's take it back and allow them to come in, get in naira, and then the government will find out the best way to go in through the path of least resistance and be able to get all of that naira sorted out, and in terms of an exchange rate. Now, the only concern I have, and I'd like to warn, is that the crude for naira deal does come with some opportunity cost. The opportunity cost is this. The question is, what would Nigeria have gained if Nigeria had sold the crude and gotten dollars? Remember, we have some obligations. We have the international debt is one, the feedback loans is another. We have some of our budgetary funding requirements that are benchmarked against our earnings in dollars. And what that means is that we are going to be losing that money by earning in naira. But that's no problem. It is now down to the regulators working in tandem with the NNPCL to boost, to come up with initiatives with the new management of the NNPCL to boost our oil, earnings, FX earnings for oil. And what that means is we have to explore opportunities to increase our production. We need to explore new frontiers. We need to enhance recoveries from the existing, assets and reservoirs. We also need to curb oil theft. Those are some of the initiatives that we need to put quickly on the table to be able to ensure that we cushion the opportunity cost effects of the crude for naira deal. The other thing is the need for the CBN to work hand in hand with the Ministry of Finance to be able to come up with a way to boost non-oil exports. Ultimately, what we need to do as a country is to earn more FX. And if we can do that with the non-oil exports, fantastic. If we can do that by boosting our production, fantastic. But ultimately, we need to look at the benefits of the crude for naira deal vis-a-vis with the realities that it comes with a contraindication, which is the side effects of it, and we need to prepare on an ample level how we can cushion the effect of that side effects.
Yeah, well, we have to, and I think there's also that need, as you noted, to increase our production. Unfortunately, we see our last production was down, it dropped. But hopefully, we'll be able to recover and do even much more. Thank you so much, Dr. Wisdom, and our oil and gas experts, for your perspective this afternoon.
Thank you very much, Jeannie. Do enjoy the rest of your day.
You too. The Finance and Business Online publishers, they've organized a capacity building and youth empowerment program in Lagos, Southwest Nigeria. The president of the association says that the motivation for the meeting is the fast-changing financial landscape globally and the need to keep the youth informed and active. The theme, empowering Nigerian youths with knowledge of insurance, digital payment and investment to drive financial inclusion, captures the essence of this meeting.
My light will shine.
The theme has also attracted officials of top insurance companies and other stakeholders in the financial inclusion and information communication technology ecosystem. Their focus is on about 200 senior secondary students and teachers from various educational districts in Lagos who have come to learn.
As the financial sector becomes more dynamic, a better understanding of the sector will aid speedy growth and development, particularly insurance, which, despite its importance, is grossly misunderstood. Hence the need to expose the youths to the basic elements of playing in this field early in their lives. We have assembled the cream de la cream of the industry to enlighten the youths as well as serve as role models.
The children are then given tips on financial management as well as career opportunities.
When you invest your money, it helps you to do what? Build wealth over time. It helps you to do what? Build wealth over time. And and it helps you to reach your financial goals. It helps you to do what? Reach your financial goals. And it also teaches you patience and planning. It also teaches you what? Patience and planning.
Continue to start small, dream big, but stay grateful. Second reason why I think insurance is a big deal. Insurance is not just a job. I say insurance is a ministry. Every time someone buys an insurance policy, they are not just planting peace into their future. You know, for people do jobs to just make money, but you can see that you are solving real problems.
This is the second edition of the Empowerment Program, and the association promises to stay on the path of sharing knowledge in relevant areas. Now, a closer look at Nigeria's headline inflation, which was released yesterday. We saw that the numbers for March increased to 24.23%, and that's because of a rise in average prices of some fresh food, garri, ginger, broken rice, honey, and then leading the drivers of inflation for March are the core inflation. Now, the report notes that the figure was 1.05%, marginally up from the 23.18%. However, that major driver, the core inflation, is a factor which economists say will need attention as we head into the end of April.
General perception of analysts were that, the impact of these changes, positive changes, should have been felt, in the general price level. In retrospect, when you take a second look at the expectation, you will say, were we not euphoric in the sense that, okay, relative stability in the exchange rate. What were the stock of goods that traders have or had? Were they bought at the current exchange rate or at the previous exchange rate? And naturally, if they bought at expensive, why will they sell at reduced prices? So maybe we're a bit euphoric. And the same thing, price of petroleum product like AGO and PMS went down. How quick did that impact, in the economy? And to what extent, for example, are transporters ready, or did they implement, those price reductions? So maybe we're a bit emotional in terms of our thinking.
Let's discuss global marketing now, and the issue of setting a performance index for entrepreneurs. So while it is pleasant to be called the chief executive officer, it's also important to measure effectiveness and impact of those big offices. And we're having this conversation with Grace Okoye. She's a digital and consumer insight strategist, joins us on the program. Hi, Grace. Good afternoon. Welcome to the program.
Thank you, Amy. Thank you so much for having me.
Great. So, it's interesting. A lot of people want to be entrepreneurs, employers of labor, chief executive officers. But what does, when you look at this, we talk about their KPIs. How can we keep chief executives effective and impactful while occupying these prestigious positions?
Okay. When we talk about KPIs, there are a number of things you need to consider, and that's also dependent on what area of business you're looking at. The first on my list would be for you to look through your click-through rate. Here, you will be able to measure how often people click on your ads or links compared to how often they are shown. We know that a high CTR indicates that your message resonates with your audience. So your message is able to resonate with your customers through the proper channels of engagement. Now, another KPI I want us to look into is the conversion rate. As a business, you need to weigh your conversion rate. And now conversion rate talks about the percentage of visitors who take a desired action For example, your business is actually either offering a product or a service. So how much of your product and service have been purchased by customers? Or is it possibly, is your newsletter also being signed up to? You know, it depends on what section you are or segment you are handling. You also need to consider your cost per acquisition. Now, this is the cost associated with acquiring new customers. One more last one I would want to talk about is the return on advertising spend. And of course, this will help you measure the revenue generated for every money spent on your advertising. I think these are the KPIs I want to talk about for now.
Yeah, well, I hear you talk advertising there, because at the root and foundation of any business is revenue. So, and since the world has gone digital now, it's more of digital marketing. What role does it have in global expansion?
For me, I would tag it under my CTR model. C stands for cost effectiveness. As a digital, digital marketer, I would advise that you use digital channels, which provides you a more affordable means to reach international audience compared to traditional marketing methods. Then T stands for target advertisement. You are able to leverage tools like social media ads, search engine marketing, and email campaigns to reach your target audience. Then finally, R, which talks about real-time engagement. You're able to, have immediate interactions with customers, facilitating feedback and engagement that can enhance your brand loyalty. Yeah, so that's basically it for me.
So beyond the basic metrics like website traffic, leads, what are some other sophisticated, often overlooked KPIs that can provide deeper insights when you're talking about global marketing and performance?
Oh, for me, I would, there are quite a number of them, but I would want to narrow it down to 5 others. The first on my list would be customer segmentation metrics. Here you are enabled to look at how different customer groups are performing to see which demographic do best in each market. There is also the churn rate. You're able to see here what percentage of customers have stopped using your product or service over time. And this will help you understand your customer retention. Then the next on my list would be the Net Promoter Score. This will help you see how loyal and satisfied your customers are, and you're able to know how likely they're able to recommend you to their friends, family, or others. Then another major one I want to consider is the market share growth. Seeing your brand's market share compared to other competitors will also help you understand how well you're doing in different regions. Then finally, I will talk about your engagement rate. On social media or, on social media, I would say you need to be able to know the amount of likes, shares, and comments, you get on different platforms. This will help you show that you connect with your local audiences,
All right, so I guess entrepreneurs don't have a choice, but they have to chase the likes and the repost. All right, thank you so much for those tips, Grace. Grace Okoye is a digital and consumer insight strategist. Thank you for your time.
Thank you so much, too.
All right, let's take a break now. When we come back, we'll step in with intraday numbers. That's on Business Incorporated. Welcome back to watching Business Incorporated. We head to the markets now. I wonder why Will came back, because she came back and she took away money from the NGX. Will, yesterday I closed the market at 104,600 plus. And today we have Why?
Ini, I don't control the markets. You know, the market has a mind of its own.
Okay.
It goes, you know, there's a seesaw movement that goes on in the market. So maybe we can find answers much later with the analysts. But right now, Ini, putting the blame on me, I wonder who I'm going to blame right now.
I mean, we had the market close at 104,600.
Yes, yesterday. It's quite disturbing.
And then at intraday, we're doing 103.
It's something we just have to...
Was it the inflation number?
Ini, I wonder when our market started reacting to inflation, but we'll find out if it is. Thank you so much. So let's just jump right into the market and see how it performed that intraday. As we speak, in Nigeria's NGX is at 103,000 level, dropping from 104 we saw yesterday. Now, at the time I took the numbers, it was 0.75% down, but it's still counting. That's in negative territory. Let's look at South Africa. On the flip side, we see South Africa doing splendid, 0.77% now at 90,000 level. Let's see quickly what EGX in Egypt did at intraday. We see it down, however, 0.35%, still at 31,000. And the NSE in Kenya, we see it performing closing Tuesday's session in the red. We hope there is a turnaround for that index. Now, let's dig into what's happening at the NGX. What's driving these numbers? Why the sudden drop? We have Oluwatobi Adesoya, equity trader, Zcrest Securities Limited, to give us these answers. Good afternoon, Oluwatobi. It's good to have you on the program.
Good afternoon. Thank you so much for having me.
So, Oluwatobi, I'm just going to put the question back to you now. Is it reaction to inflation numbers? Why are the numbers going down, plummeting so fast?
So that's the market for you, actually. So I wouldn't say it's reaction to inflation. So I would say it's more of post-dividend markdown that we've seen in the markets today, because we have some heavyweight stickers that got marked down, and the price were adjusted for dividend payment today. The likes of GTCO, the likes of Zenith. So, and we've been seeing sell-off in those stickers. So they are part of what is driving the markets, share index down intraday.
Okay, look, you mentioned the dividend markdowns. Interesting, though, to know that Access Holdings has released their earnings report, and we see them, reporting that pre-tax profits of about 867 billion naira, and profit after tax as well as at 642.2 billion naira. That's up 3.7% from what we saw in 2023. Speak to us about these numbers. We have the dividends of some of the, the top companies here. We have GTCO, Zenith, Access Holdings, Fidelity Bank. That's from the tier 2 banking, but is doing so well in terms of dividend payouts. Speak to us about the numbers we have for Access Holdings and why we have this fantastic payout for this company, and why investors are not taking, I think they should be positioning, maybe even if there's a markdown, but rather now would we see a reversal as a result of this fantastic payouts?
Okay, so for Access, they released their results yesterday, and it was a good performance. And we also saw the proposed dividend of 2.01 kobo. So that, like you mentioned, their profits, good numbers. In fact, when the market opened this morning, we even saw bids like triple the number of offers in the market. So which shows investors reacting to that and taking positions ahead of the dividend payment. But also, like you mentioned, the dividend, it is really good. If you look at it, it's about 9 to 10% yield, because when investing, it's not just about capital acquisition. It's also important to factor in dividend yield. So dividend yield, it's a good one. And like I said this morning, first, we even saw Access went as high as about 4% in the morning. So to show you how investors are reacting to that. But on the flip side, like I mentioned earlier, for GTCO, because their price got adjusted to the GTCO and Zenith. So in fact, like this morning, we have been seeing them shedding weight, shedding losses. They have been in the red, and they have been the one dragging the market down. But even though GTCO declared a dividend of about 7 naira, and why Zenith declared 4 naira, fantastic dividend. But it is just important to know that as much as there are different investors in the market with different objectives, so why some have factored in their dividend, the dividend closure is today. So which means even if they sell today, so they'll still get their dividend. So it would be nice for them to sell if they want to. And on the other hand, there will be a lot of investors that will be interested in coming in, because of the lower price due to the adjustment.
Okay, so just still staying on Access Holdings, we know that there have been a lot of acquisitions. They've been, carrying that on for a while, and that has probably impacted in terms of their cost in the company. We're looking at their dividend payout now, 2 naira 5 kobo for 2024 final, and coming from 1 naira 80 kobo we saw in 2023, and now we know that their ordinary shares, their outstanding shares, about 53 billion ordinary shares out there, up from 29 billion. They're paying a lot more now. We see that uptick. How do you see Access Holdings sustaining this, especially with all the acquisitions that have taken place? Do you see this as just mouth-watering or trying to hold investors down, or do you see it as a sustainable thing? We're going to be seeing good numbers from Access Holdings going forward.
So for Access Core, like you mentioned, we've been seeing a lot of mergers, a lot of acquisitions from the company. However, they've gotten to a point where they want to start giving values to investors. So we might not be seeing a lot of acquisition going forward, but rather we'll be seeing how they would transform those acquisitions, those assets into revenue and, of course, the bottom line. So going forward, I think they would be more focused on rewarding investors and maximizing shareholder value.
Okay, so let's look at how the market is probably going to end today. Speak to us about your outlook. Do we see markets ending in the green? And what do we see? This is a holiday shortened week, but next week, how do we see markets performing as well?
So today, for me, the market would most likely end in the red zone because we've seen some heavyweight banking tickers going down. And whether market will close up or down, it depends on some heavyweight stickers. Like we have GTCO in the red, Zenith in the red. And if there are no any bellwether ticker to come to rescue the market, so the market will definitely close in the red. Looking at yesterday's performance, it's kind of the market closed down by 30 basis points, while on Monday the market closed down 30 basis points. Yesterday it closed up 30 basis points. So we are at about 0% week-to-date gains. So today and tomorrow is what will determine what we have for this week. And for today, I'm expecting the market to close down, and tomorrow as well, I'm expecting the market to close down based on the trend we have been seeing for today, except if we see any major happenings in the markets, especially with demands from some heavyweight stickers.
Oluwatobi, please give the market some hope. We're just, negative projections there, but we thank you so much, Oluwatobi Adesanya, equity trader, Zcrest Securities Limited, for joining us on Business Incorporated.
Thank you so much for having me.
Let's look at other markets now. We see in the Middle East, Dubai not doing so well, 0.65% down. Abu Dhabi also down 0.45%. This is still probably a reaction from Trump's tariffs, but who knows? Let's see how the markets, performs much later. For Saudi Arabia, let's see how they perform. Is also in the negative. Qatar is also in the negative. You see 0.1% down. Qatari index 0.15% down. But let's see how U.S. markets performed not so well as well. They fell in pre-market trade today as traders brace for key retail sales report and more corporate earnings. Dow futures dropped 0.15%. S&P 500 futures and Nasdaq futures slid 0.174% and 1.43% each. Nvidia shares sank over 6% in extended trading after the company disclosed a $5.5 billion charge linked to GPU exports to China. Now, the drop followed a muted Tuesday session that ended with all three major indexes in the red. Let's get the highlights from our correspondent, Maria Bird.
The U.S. stock market dipped on Tuesday as the Dow Jones was down to 0.4%, the S&P 500 down to 0.2%, and the heavy tech Nasdaq lower at 0.1%. Even though the stock market was a bit calmer on Tuesday, we still saw some dips, as companies like Boeing saw a 2% loss for the day. This was mostly due to what Bloomberg reported that China has instructed its airlines to stop Boeing jets. This may cause some long-term impacts for the company. But investors are still watching to see how the tariffs will have an impact potentially on the U.S. economy. There is a reprieve, though, on some auto industry areas. This could mean that we could see a bit of an upward swing with auto sales and potentially a decrease in the impact on auto industry. Many are still watching to see how the U.S. economy will fare out over the next few days and weeks ahead.
Thank you, Maria. Meanwhile, earnings reports from travelers, U.S. Bancor, Abbott, Labs, ASML, and Citizens Financial are due later today. Now let's scoot over to the Asia markets now and see how they performed today, mostly falling on Wednesday, tracking Wall Street's losses and ongoing concerns over U.S. tariffs. Japan gauged 225 fell 1.01%. South Korea's Kospi slid 1.21%, and we see the Hang Seng Index dropping 1.91%. Meanwhile, mainland China's Shanghai Index bucked the trend, rising 0.26% after the economy grew 5.4% in the first quarter, beating expectations despite pressure from trade tensions. Meanwhile, Nifty 50 in India rose 0.47% as well. Let's see how this impacts, further trading, especially now we're entering holiday week. Let's hope that markets, taper down a bit and not see that seesaw movement we've been having in it. Hoping that markets rise, but we see our analysts telling the market's going to close negative, the market's going to close. I'm like, okay, now these predictions.
Yeah, well, I guess it's just looking at the numbers and what's going on. I mean, I don't know really for the NGX. Truly. But I mean, for the global markets, we see what's going on, the battle between US and China and NVIDIA. So the techs are going to feel it more now, especially with China and all of that. So, I mean, we'll wait and see. We'll follow the news.
Yes, we'll keep, up with this development.
Exactly. Thank you so much, Will. All right, now let's go to Berlin. Talking about that US and China trade war. Where is Europe in all of this? We know that they had told us, well, they were planning their reciprocal, and now there's the 90% break. But I wonder what conversations they're having there. What are they worried about in the midst of all of this? Can we say this is a battle between the United States and China? Lars joins us now to tell us what conversation they're having there in Europe. Hi, Lars. We're back to the tariff conversation this time.
We are indeed. Hi, Ini, how you doing?
Good.
And, yeah, and you just said something interesting. Is this a battle here that we're seeing between the US and China? And yes, of course it is. But Europe, of course, is caught right in the middle. We do have a problem here. The EU does, and that is that China, of course, is producing a lot. And they're producing a lot of everything, whether that is steel, electric vehicles, plastic toys, household appliances, electronics. China is a massive manufacturing nation, and thanks to generous government subsidies, they're actually that are obviously, as we know, playing a big role in this whole trade war scenario. They are actually also producing all of that stuff pretty cheap, cheaper at least than, say, US companies or European companies. Now, much of what China produces, of course, was destined for the US markets, but with these higher tariffs, making exporting to the US or even selling within the US at inflated prices a lot more difficult. What does China do? Now, many people worry that a lot of their goods will now be shipped to the EU to be sold on the market here. And that influx of obviously massive amounts of goods at cheap prices would be a real threat to EU producers. It's pretty clear that the EU cannot just absorb the trade that is now not happening with the US. So leaders in Brussels are trying to figure out how to engage China to not destabilize markets entirely.
Yeah, so is there any solution in the horizon amidst all of this?
I guess not yet. This is all just the beginning, Ini. If we are really dealing with a multi-billion euro trade problem, it will take some time. But EU chief Ursula von der Leyen has said that she will actively and constructively engage China. And she said, and I want to quote her, "We cannot absorb global overcapacity, nor will we accept dumping on our market." So the EU is currently in talks with Beijing about minimum prices, something that was already discussed last week with regards to electric vehicles. What's happening there is that the EU will not impose higher import tariffs on Chinese-made cars, but that the Chinese automakers agree to not sell at the artificially low prices that only they can offer to consumers, thanks to those subsidies that I just mentioned, but also due, by the way, to the general environment. Of course, they're operating and they have lower wages, and in some other ways, just generally lower production costs. Now, Some might say, why did the EU not go straight to tariffs, as obviously the US is doing? Well, that's obviously because the EU automakers were also afraid that this could be exactly the kind of escalation that would lead to counter tariffs then, and that would be a further disadvantage to the European companies.
Yeah, everybody has to be careful now because President Trump ain't joking with anybody, but let's see what investors are doing last.
Yeah, you know, Ini, we've had two strong days, Monday and Tuesday. Not today. The DAX is weakening a bit. It was down about 1%. Now it's just about even, but still slightly in the red here. It's not at all surprising. After all, we've seen so much uncertainty and so much volatility that I would say a long winning streak is pretty much not to be expected anytime soon. Today, the market is feeling some pressure out of the US again. We just heard about it earlier. It comes mostly from chip maker NVIDIA. They're saying that these Trump tariffs, that whole trade war is likely costing them $5.5 billion. And that was a shock to investors, not only in the US, but much of that here shocked investors in Europe as well. And NVIDIA obviously had been a driving force in the market's long rally until a few weeks ago. So there's definitely a lot of downside here. What else? There's a pretty low trading volume. We're approaching Easter, of course. Markets are open again tomorrow and then heading into a 4-day break. Can imagine that many are looking forward to taking a few days off.
Yeah, many, but not some of us. So thank you so much, Lars.
We'll be there, Ini. Thank you.
All right, let's head to Africa now. Ghanaians living in the United States had to comply with a new immigration rule introduced by the present administration, obviously President Trump. Everyone considered a foreign national must have proof of their legal status, such as a green card, visa document, or the 194 entry record with them at all times. All foreign nationals present in the U.S. no longer than 30 days were to have registered under the Alien Registration Act. Remember, he said that by April 11, according to a notice from the U.S. Department of Homeland Security. Failure to comply with the rule could lead to fines and charges and possibly jail time. We're still around Ghana. 91 countries, including Ghana, to benefit from a United Nations Development Program, that's the UNDP, $38 million biodiversity conservation financing project. The fund is to help bridge the current global biodiversity financing gap of $700 billion and also support the beneficiary countries achieve their action targets of 18 and 19 of the Global Biodiversity Framework of eliminating nature-harmful capital flows and scaling up finance for biodiversity. The initiative also aims to support the development of national biodiversity financing plan and mobilization of resources for the implementation of a global biodiversity framework. And still around Ghana, the International Monetary Fund, that's the IMF, says that it has reached a staff-level agreement with the country on the 4th review of its 3-year extended credit facility program. IMF, in a statement, said the agreement, which was announced at the end of a 2-week mission in Accra, is subject to approval by the IMF Executive Board. According to the mission chief for Ghana, Stephanie Roger-Tana, Ghana will gain access to an additional $370 million, bringing total disbursement under the credit program to about $2.4 billion since May 2023. The external sector has seen a considerable improvement driven by solid exports, particularly gold, and to a lesser extent oil and higher remittances. As a result, international reserves accumulation has far exceeded the ECF-supported program targets. In Egypt, their net reserves assets rose for the 11th consecutive month in March, continuing a sustained recovery from more than 2 years of deficits. This is according to the central bank data. The NAFAC increased 632.8 billion Egyptian pounds in February, and that's up from 613.1 billion pounds the month before. And this translates to $12.4 billion at the end of March, and 12.01 billion at the end of January, according to their official central bank currency rate. And then other than that, the improvement marks a sharp reversal from the February 2022 when Egypt's NFAS first turned negative. The Central Bank of Egypt reported a return to surplus in May last year, 2024, with it swinging from £36.07 billion deficit in March to £458.6 billion surplus by the end of April. Still in Egypt, the government has allocated 150 billion Egyptian pounds for petroleum subsidies in its upcoming fiscal year's budget to stabilize the energy sector and meet citizens' needs, according to a statement by the Minister of Finance. The upcoming fiscal year's allocations for petroleum subsidies are lower than those of the current full year of 2024-2025. That saw a 154.4 billion Egyptian pound. However, this contradicts Minister's announcement in March that the government will cut these subsidies by 51.4% to slightly over 71 billion Egyptian pound by 2025 and 2026. According to the minister, the new budget allocations include 742.5 billion Egyptian pounds for social protection, reflecting a 16.8% annual growth. Egypt aims to lower its debt to GDP ratio to 81% by the end of June 2026. And that's part of a broader strategy to ease public debt burdens and improve fiscal sustainability, according to the finance minister, unveiling the government's 2025-2026 draft budget dubbed the Budget of Growth, Stability and Partnership with the business community. The minister says that Egypt also plans to reduce the external debt of budgetary entities by $1 to $2 billion annually. Let's head to the crypto space now and see what we have right there. Yes, CBEX is the biggest news from there. Everyone is crying, everyone involved, that is. And on our sister program earlier today, there's been discussion. We had EFCC give some warning and some tips on how to be careful about some of those fraudulent moves and schemes. But the victims of CBEX are not finding it funny at all. I learned in Oyo State, they broke down their offices and all of that in anger. And online, individuals are not able to log on or log into their accounts and everything. Is that why BTC is down this afternoon? Well, I do not know. I guess we'll find out in the course of the program. We're supposed to have Gilbert Jopata tell us now. But for this afternoon, we see Bitcoin is down almost 2%, 1.97%, and it's more of red. Even though Ethereum is still holding to the 1,500 level, XRP is red. So it's a red market at this time. Let's have Gilbert Jopata tell us what's going on, the fear of schemes, illegal schemes, fraudulent schemes. Is that back? Hi, Gilbert. Welcome to the program.
Good afternoon.
Good afternoon. So what are you guys talking about this, well, very historic, when we look at the history of Nigeria? At least we haven't had a story like this in a very long time.
We've had something like this even within the past month. Maybe it did not get to you, but I think this is something that really drew the attentions of Nigerians. You know, so CBEX, disguised as an investment platform, promising investors like 100% return in just 1 month with no losses. You know, this is a major red flag to anyone who is familiar with real investing. However, this seems to be like what attracted a lot of persons to this website. You know, it had a clean professional design. There was no deposit limit, which means people could invest as much as they want, but there was no actual trading happening. what was shown on the dashboard wasn't real profit. So it happened until Monday this week when the withdrawal button was disabled. And you know, this is always the classical exit scam for always Ponzi scheme like this. But then forensics shows that you know, funds were removed to a personal wallet of about $843 million, which is about 1.3 trillion naira, gone just like that. What bank in Nigeria can declare this kind of, you know, earnings at the end of the year? You know, but this was something that this fraudulent platform was able to get away with. And yet the red flags were everywhere for everybody to see. Who owns this platform? No one really knew. Where was it based? It wasn't clear. Was it registered with the Security Exchange Commission? No.
So Gilbert,
you know,
should we say greed? Should we say greed is a driver here? Because, I mean, how can anybody promise you that you get 100% of your money in 30 days and you don't see what value is being, your money is being used for, and, you know, you expect 100. So do we just say it's greed?
Okay, I will say, as someone who has been in the forefront of, you know, warning persons about red flags in the market and also an educator in the market, I will tell you the major challenge we have is lack of investors' education in Nigeria. We have lack of investors' education, and in most cases, even when you give people financial literacy training, it is often ignored or criticized simply because it does not promise quick riches or instant gratification. You know, and that is why platforms like this have always done well, you know, in Nigeria whenever they come, because they comes with this, you know, this greed. The thing is that anybody who understands investing, Ponzi scheme like this will not meet his or her investment criteria. So I think majorly it's lack of investors' education that is disturbing the Nigerian market. And you know, if it sounds too good to be true, it probably is. You know, investing is slow and steady wins the race, and not flash and flashy promises. Yeah, but then I think this should be an opportunity where bloggers and creators should stop mocking these victims. You know, some of these persons are on the edge, you know, so they won't commit suicide. You know, in Europe, victims are not always laughed at. It is always, the government always investigate and pursue justice. So we could do same. Let's combine education with empathy and push for a law enforcement agency to take this serious and also pursue financial predators like this. These are not Nigerians. They came into the country and they took advantage of the Nigerian market. So I think that our law enforcement agency should also look for how they can also protect its citizens.
Yeah, so is this, I mean, because, you know, for some people, you talk about investment literacy, financial literacy and all. For some people, it's an online platform, it's crypto, it's a digital trade and all of that. Is this posing any kind of challenge to the crypto community?
Oh, no, it doesn't. The thing is that you could use anything for fraud. You could use gold. You could use naira. I was seeing this data that showed that the amount of money that is used for fiat scam is not even up to a quarter of the cryptocurrency market cap, the entire market cap of the cryptocurrency market, you know. So you could use anything at all for fraudulent activity. But then it was very, very clear that this is a Ponzi scheme because they claimed that they were more like they used this money for trading. So what personal research had an investor done to have considered this an investment? This does not pose any threat. You know, what makes cryptocurrency unique is the fact that it is transparent, it's an open record, and that is why anybody could go online and find out how much that was moved into their personal wallet because of the decentralized nature of cryptocurrency. And then I think that the fact that this was even done with the blockchain means that everybody could go and track and find out where the money is, where it has arrived. So it makes it even more difficult for the persons who are behind this activity. So our law enforcement agency, I think that they could trace, you know, and work with any collaborative agency around the world to get these financial predators to face the law.
All right, Gilbert, thank you so much for that.
Yeah, thank you.
That's it on the program today. Thank you so much for being a part of Business Incorporated. Of course, we sympathize and empathize with the victims, but of course, it's also important, you know, if you want to invest your hard-earned money anywhere, get information, be sure of where you're putting your money, and don't expect 100% in 30 days. Sounds too good to be true, isn't it? Well, that's it, and that's why we're here on Business Incorporated. We'll do this again tomorrow. God's grace. I'm Ini John Mekwa. Bye-bye.